Much. Well, we now turn to someone who sees bankruptcy ahead in the airline sector. William Swelbar is a research engineer at MIT's International Center for Air Transportation. Bill joins us from Bloomberg's Washington Bureau, and thanks so much for being with us.
Thank you. Good morning.
So, listening from Scarlett, from what Scarlett was talking about, essentially we're in cost-cutting mode for the airlines. When does that lead to bankruptcy?
Well, any move to bankruptcy is going to be highly dependent on the direction of the revenue line for the industry, which is deeply troubled and which Mr. Kelly certainly mentioned is very cloudy for the second half of the year.
Okay, so what is your outlook then? What is your outlook for the second half of the year? I mean, you are predicting that at least one major airline is going to file for bankruptcy, so certainly your outlook is going to be a lot more bearish than what we're hearing from some of these airline executives.
Sure, and the outlook for me is there are airlines that you need to make money in the second and third quarters of every year. We are now going to turn to the historic soft revenue season of the fall and the winter, and those airlines that have significant exposure to international markets that have been deeply troubled from a revenue perspective, and those airlines that are facing some high fixed obligations that are coming due in the next 12 to 18 months are in precarious cash situations.
But aside from bankruptcy, though, Bill, I mean, is there anything that the airlines can do here in the U.S.? Is there further consolidation ahead, perhaps?
And we could see a call for consolidation as we move to the fall. And honestly, consolidation is something that this industry has needed to do for the last 20 years. And so anything that can be...
We have been consolidating, though, no? I mean, back in the early 2000s, we saw quite a bit of consolidation there.
And we've been consolidating in the last few years, in effect, as the industry has reduced capacity in response to a difficult fuel environment and now a very sick macroeconomy.
What is the exact problem for these airlines, though? Spell it out for us. Is it that demand is falling so much? Is it that fuel prices are so volatile? Is it the access to the credit markets? Exactly what are the wrong things going on for them?
I think it's all of the above, and certainly fuel now would be the third story of the three issues that you raised. The revenue environment has long been the Achilles heel of this industry. Since the industry has been deregulated, fares have fallen at a rate greater than inflation to the tune of 55% over the last 3 decades. And certainly the announcement of revenue yesterday, where it is that traffic has down 7%, but revenue down 21% for the industry year to date, just continues to compound a problem where it's difficult to cut costs as revenues fall that much faster.
Okay, Bill, just to wrap it up, what does this all mean for consumers, from passengers? Does it mean that ticket prices won't go up, but fees will go up?
First of all, right now, in a period of soft demand, the consumer is continuing to enjoy incredibly low fares. Simply, this industry needs to increase the revenue or the fare it charges the passenger. Fees are not going to go away, and fees should not go away. This is an industry that needs to find new revenue, unbundle its product.
Okay. Bill, thank you so much for joining us. Bill Swelbar of MIT.